All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world, and happy Wednesday, everybody. Today's February 19th, 2025. And the top story this morning, I really wish it wasn't. It's a silly story. It's a stupid story, but it is an important story, and a lot of people are talking about it. The Doge dividend. All right, there's that silly branding idea. All right, let me just start off by saying, reality check. The Doge dividend is not an official thing. There's nothing on paper. There's nothing going through Congress. There's no executive order calling for a Doge dividend. It's really just this story that's playing out on Twitter. But the idea that this is even being considered, that we're even talking about this, is just so absurdly stupid. And I've been kind of warning about this for months, guys. Like, we got to temper our enthusiasm. Look, I voted for the guy. I like what Elon is doing at Doge, right? I mean, generally, things are going my way in DC, generally. And I don't like everything. But what are we really talking about here? Doge dividend. They're talking about sending $5,000 checks to every household. This guy named James Fishback, he's the CEO of Azoria. He's also like an unofficial advisor to Doge, which is an unofficial advisory group to the president. Somebody explain how that works. I don't know. This guy is on Twitter proposing to Elon that they send a Doge dividend equal to about 20% of the savings from Doge, or $5,000 to every American. And Elon says, we'll check with the president, which means we're considering it. And look, I'm a libertarian. Generally, I don't like the government taking my money, and the government having less of my money is a good thing. Yeah, okay. I can get down with that. How about take less taxes to begin with? What a concept. But here's the problem, guys. Number one, Doge, yes, they are highlighting stories of waste, and they are saving money. Debatable how much. Obviously, I've been in enough boardroom meetings and watched enough executives ridiculously inflate statistics to make themselves look better, to know that the numbers probably aren't as high as being advertised. But at the same time, I'm glad we're not spending $50 million for condoms for Mozambique anymore. It's a stupid idea. We're $36 trillion in debt. But, these headlines, they're profound and the waste is so stupid. But the numbers are pretty small in terms of government spending. We're $36 trillion in debt, and the amount of money Doge is actually saving is nowhere near enough to pay for $5,000 checks for every American household. And that's beside the fact that despite any money that Doge is saving us, the government will still be operating at a loss. They'll still be borrowing money. The national debt will be getting even bigger. So ultimately, what is the source of the funds going to be for any of these Doge dividend checks? It's going to be borrowed money. And who backstops the bond market where the government borrows money? The Federal Reserve. And how do they backstop it every time things get bad? They print money. So what are we really talking about here with this Doge dividend? No, it's not a tax cut. No, it's not a rebate. It's just another Stimmy check being paid for by money printing. We're just calling it something else and offering up a silly explanation where we rationalize the logic of it, much like a drug addict convinces himself that one more bump really won't hurt him until eventually one actually does kill him. Guys, what are we talking about here? This is so stupid. We've got Federal Reserve officials talking about temporary inflation. We've got rate cuts, and now we're talking about Stimmy checks like 2020 didn't ever happen. We have learned nothing. And this is why I said during the election, guys, as much as, I have my preferred outcome and I really don't like communa, at the end of the day, they're both inflators. They're both money printers, and they're proving it. I hope they continue cutting the spending. I hope they continue eliminating government waste, but stop with buying votes and Stimmy checks and bread and circuses. Get the damn debt under control. The debt and the monetization of debt is why the cost of living for the average person keeps getting worse, and no, a $5,000 Stimmy check will not solve that problem. Period. Hard stop. End of rant. All right. Also, while we're talking about inflationary policies, hey, tariffs are back in the news today. The Donald is floating a 25% tariff on semiconductors, drugs, and autos. And he's saying April 2nd, he will have more to say about that. Now, this may sound similar to other stories, but it's not. We've been talking about 25% tariffs on Canada, Mexico, and China. And we've been talking about 25% tariffs or reciprocal tariffs, but never a specific percentage on a specific industry. This is new, targeting specific industries with tariffs. So, hey, that's inflationary. That's in the news on top of the Stimmy checks today. And then we can all act surprised when inflation makes a comeback. We've got Nikola has officially filed for bankruptcy. Look, it's a fraudulent company, and it's one of those pandemic boom stocks, and I'm glad to see them go. Look, Nikola shares, we reported this one last week that Nikola was rumored to be going bankrupt. And, we talked a lot about it. It was people familiar with the matter, right? Anonymously sourced. Yesterday, Nikola's stock was bid up 41%. All right. I got to talk about this, guys. Like, this is like an intervention for some of you people. There's a company that is rumored to be going bankrupt following fraud investigations and the founder being freaking prosecuted. And you maniacs bid this stock up 41% yesterday, only to see the bankruptcy filing be made official today, and the stock falls 49% immediately after. Guys, this is going to zero. What are you doing? Like, you're bidding up a stock on the brink of bankruptcy by 41% in a day. How do you envision this playing out in your head when you click buy and you're like, oh, this sounds like a great idea? Case in point, the best performing stock in the S&P 500 right now. Guess what? You'll never guess what it is. Let me know in the comments. What's the best performing stock in the S&P 500 right now? Whoever gets it in the live chat wins 100 million Melon coin paid for by, I don't know, the Bank of Melon Bank in the central bank. It is, no, it's not Intel, Beck. Beck got it. Sorry, Tim said Intel. Beck got it. Supermicro, SMCI, is the number one performing stock in the S&P 500. Can you believe that? Supermicro Computer, they're 5 days away from being delisted for their second accounting fraud in 5 years. By the way, Supermicro stock is now trading higher than the level it traded at before the Hindenburg research report was released, before the company delayed their 10K, before Ernst & Young resigned saying the management is liars, before the announcement of the DOJ probe and the SEC probe, before the 6 months of delayed 10Ks and 10Qs. Supermicro is now higher than it was before all that happened. You freaking maniacs, how do you envision this playing out in your head? Accounting irregularities is not a buy signal. We're getting basic here. Like, gentlemen, this is a football. All right. Accounting irregularities is not a buy signal. Okay. All right. Moving on from that. We got another, speaking of pandemic boom stocks and Nikola, we had Etsy just posted a big earnings miss. What did we see? Gross merchandise sales down 6.8% in Q4. Sign of stressed consumers right there. And when you've got a sign of stressed consumers, keep in mind that a lot of people who were feeling that consumer stress were trying to offset it by starting side hustles at home. Well, declining gross merchandise sales at Etsy would suggest that those side hustles are also becoming a lot less profitable. Paging Airbnb owners, it's another large group of people who started side hustles that probably aren't cash flowing the way they envisioned during the boom and the vid. And we got Toll Brothers missed earnings yesterday afternoon. Now, Toll Brothers is insisting that their core business of home building is doing well, even though they missed on both estimates for homes under contract and homes delivered. But there was an interesting tidbit. Toll is chalking up this big earnings miss to impairments and a delay in the sale of a stabilized apartment building. So possibly a little bit of commercial real estate exposure for the biggest residential home builder. That's interesting. Toll Brothers is a luxury home builder, and they're losing money because of a rent-stabilized apartment building. So it's another like 2020's bingo update kind of headline going on this morning. And also, speaking of the housing market, we got mortgage rates came out down another 2 basis points at 6.93 last week. That's down 16 points off its high from January 10th. Mortgage rates went down last week despite higher than expected CPI and PPI readings. The market really just shrugged off that higher inflation last week. And here we are talking about more rate cuts and Stimmy checks again. It's almost like we never learned our lesson. from the last couple of years. And last but not least, applications for a mortgage down 6.6% despite those lower rates. So things continue to be chilled in the housing market. Why don't we shrink my big melon of a head? We got a lot to talk about this morning. And let's see what is going on in the world of finance. Don't forget that like button and that subscribe button if you're new here, because we do this one every day. So come have your coffee with the melon heads. Right now, the S&P 500 is down 12 points, 0.2% lower, marginally down this morning. The Dow is down 110 points, a quarter of 1% lower. And the NASDAQ is down about 29 points or 0.13%, doing slightly better than the Dow and the S&P. Looking over at the DXY, we got a little bit higher on the dollar this morning, 107.12. That's up by about 7 points, but the dollar's pretty much unchanged here. Looking over at the bond market, we got yields are marginally higher. The 30-year Treasury, 4.784. That's up by about 2 basis points. The 10-year's at 4.567, up 2 points and change. The 2-year, meanwhile, is at 4.304. That's up almost 1 point. And the 1 month is unchanged at 4.330. So not a lot happening in the bond market today. Looking over at commodities, we've got a mixed bag in commodities. Spot gold is up a little bit here, $2,939. At one point overnight, spot gold hit $29.47. I do believe that is another all-time high for spot gold. Right now, up about $4 or 0.14%. Spot silver, meanwhile, is off by about 4 cents here, $32.85, just shy of $33 for spot silver. We did hit that overnight. We went as high as $33.07, but now we're down by about 0.1%. But I still like the shiny. We've got copper is off by 0.25% this morning. Platinum is down 1%. Palladium is down about 0.5%. And West Texas crude oil is up this morning at $72.69 for April WTI futures. That's up about 86 cents or 1.2% higher. Looking over at Bitcoin, we were looking yesterday like Bitcoin might be breaking down a little bit here. We're trading currently at 96,184 as priced on Coinbase. That's actually up about $500 from yesterday. At one point late yesterday, we dipped quite a bit. It was looking like a breakdown. We went as low as, let's see, what was the low yesterday? 93,300 before rebounding a couple grand. Now we're actually up a few hundred, but Bitcoin is still kind of range bound, stuck in here. Hasn't been a lot of movement on this front for quite a while now. All right, let's talk about the big one this morning. We have to do it. Elon Musk weighs giving $5,000 to all Americans from Doge savings. And here is a reality check. As Doge chief Elon Musk weighs giving $5,000 checks to all Americans from his department's savings, we examine if this is a realistic possibility or merely a political gimmick. Right now, it's neither. Right now, it's just two guys talking on Twitter. That's important to remember. Real checks or reality checks? That is the question. When avid Doge supporter James Fishback proposed divvying up so-called Doge dividends to common Americans and tagged Elon Musk on Twitter, it generated much buzz online. Musk, too, responded with an equally buzzworthy, "We'll check with the president." This escalated speculation over the possibility of 79 million Americans getting checks worth $5,000 from Doge's claimed $55 billion savings for the federal government. The real picture, however, remains unclear. We're going to skip over some of the political bickering here. News platform Politico, meanwhile, cited budget experts who cautioned that any rebate program was unlikely without congressional approval. They also warned that many lawmakers would rather use that money in other ways, like cutting the national debt or paying for tax extensions, as well as wasting it on silly things that make them rich and you poor. F. Stevens Redburn, a public policy lecturer at George Washington University and a former official of both the U.S. Office of Management and Budget and the Congressional Budget Office, said any decision would pass through the two offices and the U.S. Treasury before action is taken. If the Doge dividend proposal is real, you have to have a way of estimating and collecting the amounts that are being saved and putting them into some account. Both OMB and CBO would look at that, and then Treasury would then record those amounts. Even if there were measurable savings, Congress would still need to authorize the repayments to taxpayers and the method of distribution. So I guess the point here, guys, is this is really just right now a silly thing being hashed out over Twitter. There's nothing official, but again, not to rehash everything I said in the opening here, but this is stupid. As long as the government is still operating at a deficit, Ultimately, we're talking about Stimmy checks backstopped by the Federal Reserve and their money printer, thus more inflation. And speaking of inflation, Trump floats 25% tariff on U.S. autos, drugs, and chip imports. And just to reiterate, guys, I don't know if some of you were aware or not, but tariffs are inflationary. That's right. President Donald Trump said he would likely impose tariffs on automobile, semiconductor, and pharmaceutical imports of around 25%, with an announcement coming as soon as April 2nd, in a move that would represent a dramatic widening of the president's trade war. Trump had previously announced 25% tariffs on steel and aluminum that are set to take effect in March. Tuesday's comments are his most detailed yet, in specifying other sectors to be hit with fresh barriers if implemented. Asked about similar levies on pharmaceuticals, drugs, and semiconductor chips, the president said it'll be 25% and higher, and it'll go very substantially higher over the course of a year. Trump said he wanted to give companies time to come in before announcing new import taxes. When they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance. Now, when he's talking about the factory here in the States, I don't know, is he talking about, say, Intel and the factory they've been trying to build in Arizona, which has been taking forever despite very generous government grants and subsidies and loans? Maybe they're trying to use the stick of tariffs to speed up Intel and get them to start building their chips here. Or maybe they're talking about autos. That's always been a topic of contention. Pharmaceuticals is a big one. Almost the entirety of our medicine supply chain comes from China. And, well, it doesn't take a very vivid imagination to wonder or imagine that going to hell in a handbasket real quick. So they're using tariffs to try to onshore manufacturing here. We'll see if it works. Despite tariffs, any onshoring is going to have to contend with the regulatory environment in the United States, the more expensive labor, the tax burdens in the United States. Also worth pointing out, guys, they're talking about chip imports here. Remember, almost all of our chips are imported from Taiwan Semiconductor. And, well, we got this whole AI bubble going on. 25% tariffs on top of the price of those GPUs probably would not be very good for this stock bubble. Changing gears a little bit here, we got embattled EV maker Nikola files for Chapter 11 bankruptcy protection. We reported on this rumor last week. It is no longer a rumor. It is official. Nikola, an auto startup that was once a favorite of Wall Street analysts and retail investors, filed for bankruptcy protection after failing to secure a buyer or raise additional funds to maintain operations. The filing marks the finale of the Phoenix-based company's years-long fall from grace. At its peak in 2020, Nikola was valued more than Ford Motor at $30 billion. They inked a multi-billion-dollar deal with GM, and they were considered the pinnacle of auto startups to go public through reverse mergers and special purpose acquisition companies. The SPAC bubble strikes again. The company's downfall has played out over years, ignited by scandals and lies involving its founder and former CEO, Chairman Trevor Milton. The fast-talking, energetic, disgraced executive was convicted of wire fraud and securities fraud in 2022. No, wire fraud and securities fraud is not bullish the stock, you maniacs, for misleading investors about Nikola's operations and zero-emissions technology. The controversies were first made public by short seller Hindenburg Research after the deal with GM that included the Detroit automaker taking a $2 billion stake in the startup. Once again, shout out to Hindenburg Research. Amazing work they did over there. I will miss Hindenburg Research. I will miss their reports. Remember, Hindenburg is now essentially defunct. They closed up shop a few weeks ago. But look at what Nikola did yesterday. Yesterday, the stock was up 41%. This morning, it's down 49%. Guys, when a company is rumored to be going bankrupt, that's not a buy signal. When a company has accounting irregularities, that's not a buy signal. When a company's founder and CEO goes to jail for wire fraud, not a buy signal, okay? The reason I reiterate this is because of this chart, this ridiculous chart. Super microcomputer, SMCI stock. And you can't really see it so well on screen, guys, but here is where it's trading right now, just a hair shy of $60. And the reason I point out that level is because right here is where the Hindenburg report was released on August 27th of last year. Shares are now trading $5, almost 10% higher than they were when the Hindenburg report was released. trading higher than they were before Ernst & Young resigned, before the DOJ probe, before the SEC probe, before the delistment notice from the NASDAQ. And guys, it's the 19th right now. They have until the 25th. That is 6 days. They have 6 days to file their 10Q that was due in August of last year. All right. They delayed their 10Q on August 28th. All right. So this entire time they haven't filed their 10Q. And yet in the next 5 days, somewhere around here, apparently this market is bidding up the stock 400% in a couple of weeks because Charles Lang says, oh, yeah, we'll be fine. Don't worry. Nothing to see here. Move along. Okay. I'm sure this has nothing to do with what we just saw with Nikola. Look, guys, this is going to be spectacular one way or another. I did a video about this. Maybe they're just going to have BDO is just going to sign off and it'll be a whole never mind. And this stock will rally up to hundreds of dollars and the bubble inflates further. Or maybe BDO is not going to sign off and they're going to get delisted. Or maybe there's going to be a restatement of their earnings, kind of like there was a restatement of earnings at Enron in October of 2001. And, well, we all saw how that one ended. Again, guys, accounting irregularities, not a buy signal. Just throwing that one out there. All right, let's talk about Etsy real quick here. Another pandemic boom stock going down. Etsy misses Wall Street's revenue estimate as marketplace sales dip. The stock is falling on this news. Etsy stock was down 7.5% in pre-market trading on Wednesday after the online marketplace missed the estimates for revenue as gross sales on its platform dropped. The company cited pressure on consumer discretionary product spending, challenging year-over-year comparisons in a shortened holiday season, category mix, and a highly promotional and competitive retail environment. Now, I'm just going to zoom in on this number right here. Etsy's marketplace gross merchandise sales dropped 8.6% to $3.3 billion. And look, handmade stuff on Etsy, that's probably like your quintessential discretionary item, right? If you're struggling to make ends meet, buying stuff on Etsy is probably the first place you're going to cut or one of several first places you might look. And there you can see it. Gross merchandise volume down almost double digits here to $3.3 billion. It's a sign of struggling consumers, guys. There's no other way to look at that. And remember, a lot of people started side hustles on Etsy as a way to offset the cost of inflation. Well, it's probably not going so well now. Etsy stock down 6.7%, trading at $53.46. That's off by about $3.83. We also got a miss from Toll Brothers, one of the biggest home builders in the country. They missed earnings estimates and the stock falls. This one in Barron's this morning. Toll Brothers shares were down Tuesday after the builder reported first quarter earnings and sales that fell below analysts' expectations. It wasn't high housing costs or increased competition from more homes on the market that led to the miss, said the builder, which is best known for its luxury homes. This was due primarily to impairments and a delay in the sale of a stabilized apartment property in one of our joint ventures. That's according to CEO Doug Yearley. Our core home building operations met expectations in the quarter. Now, this is kind of interesting because I'm getting shades of like New York Community Bank here. Remember New York Community Bank, the bank that was on the brink of failure last year? It was because of bad loans to rent-controlled multifamily apartment buildings in New York City is what almost took down New York Community Bank before Steve Mnuchin and company bailed them out. Well, here you've got luxury home builder Toll Brothers saying we're missing earnings because of impairments, in other words, writing down the value, and a delay in the sale of a stabilized apartment property. Since when does Toll Brothers do rent-controlled apartments? That one really caught me off guard here. And, it's the commercial real estate problems creeping into the residential home builder market that really caught me off guard here. Now, that's not to say pressure from housing costs or increases in supply aren't concerns for the builder. While demand was solid in our first quarter, we've seen mixed results so far this spring selling system, Yearly said. Although demand has remained healthy in many of our markets, and particularly at the higher end, affordability constraints and growing inventories in certain markets are pressuring sales, especially at the lower end. The builder delivered 1,991 homes and reported 2,307 homes under contract in the first quarter. That is falling short of estimates for 2,060 deliveries and 2,452 new orders that were expected. So they're saying their home business is pretty strong, even though they're missing estimates for their home selling business. And they've got this big loss with some mystery multifamily rent-controlled apartment building. Toll Brothers stock down 5.37% this morning, trading at $115.50. That's off by $6.55. Also, speaking of the housing market, we got the average contract interest rate for a 30-year mortgage with conforming loan balances in the U.S. It declined further to 6.93% for the week ending February 14th. That is reaching a new low since December of 2024. That's not going back that far. That's only about 2 months. But we're down from 6.95 in the previous week, and we are well off the high that we saw of what were we? We were 7.09% back on January 10th. So rates have crept down a little bit over these last couple of weeks. The market is really shrugging off these higher inflation prints. Usually we get higher interest rates when you get higher inflation prints as people start to demand higher payment for locking up their money for 30 years. We haven't seen that. The market, ignore inflation at your peril. That's all I can say there. Kind of like the whole buying, accounting irregularities, not a signal to buy. Yeah, don't ignore inflation prints either. Meanwhile, mortgage applications in the U.S. fell 6.6% from the previous week for the period ending February 14th, erasing the rise from the prior 2 weeks. The decline took place despite another week of softening in benchmark interest rates, indicating that high prices for housing continued to sideline potential home buyers. Applications for a loan to refinance a mortgage, which are more sensitive to short-term changes in interest rates, shrank by 7% to trim the near 20% surge of the combined previous 2 weeks. In turn, applications for a mortgage to buy a home fell by 6% to mark the fourth consecutive decline. So further evidence of the housing market being frozen in place here. People are just being forced out of the housing market, more people being forced into the rental market. And one other thing I got to point out, guys, I saw this one. I got to send a shout out to the Lost Cosmonaut in the Discord. Lost Cosmonaut, thank you for sending this. This cracked me up. Now, I've never heard of this outfit, this Yendo. I guess this picture is going around on Twitter. But just stop and admire how stupid this is, or just, again, you maniacs. I feel like Charlton Heston in Planet of the Apes here. You maniacs. You blew it all up. The credit card powered by your car. What's the worst thing that could happen? Yendo is the first credit card backed by vehicle equity. And I feel like I got to put on my gump here. Like, you ain't got no vehicle equity, Lieutenant Dan. Vehicle equity is kind of an oxymoron, a jumbo shrimp. Most vehicles are underwater, have negative equity the second you drive them off the lot, but I digress. It works like a regular MasterCard, but it taps into your vehicle equity to get higher limits at affordable rates. Pre-approval in just 2 minutes, credit limits up to $10,000, and all credit scores are welcome to apply. Yeah, sure. Don't worry. Like, is your car being repossessed and it's underwater and, you paid way too much for it in 2023? Don't worry. You can still borrow against it, apparently. Guys, this isn't going to end well. Like, don't borrow money using rapidly depreciating assets as collateral. And, when I saw this, I couldn't help but think, what doesn't last very long besides cars? GPUs, graphics processors. So if you're looking at this story and you're like, oh my God, borrowing against a rapidly depreciating auto asset is silly and reckless and is terrible for the lender. Well, cars last even longer than GPUs do. So how does this work for an outfit like, say, hypothetically, CoreWeave, there's that name again, who borrowed almost $10 billion over the last, it's almost 2 years ago now. They borrowed almost $10 billion using rapidly depreciating GPUs as collateral. What happens if they don't pay that debt because, I don't know, say DeepSeek disrupted the whole market for data centers? Go ahead and repossess those GPUs, which are now worth a whole hell of a lot more than was borrowed against them. It's pretty much the same thing as Yendo, the credit card powered by your car. This is one of them what stage moments, if you will, when you see this one. So once again, shout out to Lost Cosmonaut on Discord. Thank you for sharing that one with us. I appreciate the laugh this morning. And just want to say welcome, Viv B, a new Melonhead member. Thank you so much, Viv, for supporting the channel. I appreciate that very much. Oh, and she's clarifying in a super chat, not new, just had to update payment details. Well, thank you for supporting the channel with that update anyway, Viv. Welcome back to the Melonheads. Appreciate that very much. Armando Reyes, thank you, sir. He says, I don't need the money, but if you do send me $5,000, I'll just turn around and spend it all on gold. So do me a favor and make it rain. Now it's funny, Armando, you're kind of like illustrating the Cantillon effect here, right? Or the Cantillon effect. I think the guy was French. Where does the money flow when you inflate, when you expand the money supply, which is what a Stimmy check is going to do? It's going to expand the money supply. It flows first into assets, doesn't it? And here's Armando Reyes saying what I would probably do, Armando. That's what I did with my Stimmies in 2020. I bought gold and silver with them. Yeah, I'll take that printed money and I will chase assets with it. And, well, gee, where have we seen this before? Besides every time in history helicopter money has been done, this exact thing that Armando is describing played out. It is very predictable. It's a good idea, Armando. I mean, that's probably what I'll do if they do this. But it also just goes to show that this is a terrible idea because it's just going to lead to more consumer price inflation. I'm not saying your idea is terrible. The idea of the Stimmy checks in general is terrible. Thank you, Armando Reyes, for supporting the channel, sir. And my man, the Pasta Man, thank you, sir, for supporting the channel. He says, Musk used a Twitter poll to liquidate billions of Tesla stock. MicroStrategy, is that what we're saying? Of public opinion for economic messaging. Decision made. They're just crafting opinions. Musk used a Twitter poll to liquidate Tesla stock. Is that when he was talking about should I sell Tesla and buy Twitter? Is that when he used a Twitter poll to do that? Look, Elon's... Well, hold on a second. Sorry, guys, I'm still fighting the scratchy throat. Elon has always pushed the boundaries of what's allowed by the SEC with what he says on Twitter. I have mixed opinions on Elon in general, and I probably shouldn't say this because it's probably going to really hurt my Twitter growth or whatever. Whatever. I speak my mind, guys. It's what I do. I have mixed feelings on Elon. I think Elon is out for Elon. He's very transparent in his self-interest. So as long as your interests are aligned with Elon's at any particular moment, you'll be fine. The second they're not, look out. But I mean, this economic messaging by Twitter and crafting opinions, I agree. I think that's kind of what's playing out on Twitter. I also think that's kind of what's been playing out with this silly billionaire pissing contest between him and Sam Altman over the last couple of weeks, which has been hilarious to watch. But again, it's just stupid on the whole. This is just a terrible idea, guys. No more Stimmy checks. Stop it. All right. Stop it with the Stimmy checks. It's not a bad idea. Get the damn debt under control. That's my only takeaway. Thank you very much, Pasta Man, for supporting the channel. I appreciate it, brother. The Dragon of Revelation is back again. He says, so what's Powell been up to since Trump's election? Well, I can tell you most of what Powell has been up to has been dodging questions from the press pool that just wants a soundbite they can use to make Donald Trump look bad. That has been the singular pursuit of Jerome Powell since Trump's election. It's also been to stop cutting rates. I mean, right? What has the Fed done since Trump won election? Nothing, right? They've done nothing. They stopped the rate cuts right away after being in a gigantic hurry. They stopped making any changes. They made some of their silly policy statements. And then he stands up and he says, I look forward to your questions. And then he dodges questions from a unbelievably biased press pool that just wants a soundbite to beat him over the head with. That's all Powell has really done. And I'll be honest with you, I kind of hope Powell keeps doing nothing. I mean, when the Fed does things, it usually is bad for us. It hurts the average person. So let's take that for the win that it is. The Fed doing nothing is the best possible outcome. Keep up the nothing work. I hope your nothing goes really well. Keep doing nothing as long as humanly possible. That's my message to J Powell. Get your hands off the panel. Quit pressing buttons, right? It's like the machine stopped working. Pounding on your keyboard is not how you fix it. All right. Thank you very much, Dragon of Revelation. And Armando is back. He says Powell has been crying in the shower. I'm not going to do an impression of Powell crying in the shower. Sorry, guys. And don't make me laugh. It still hurts my throat. Do you think maybe deep down Jerome is really just a fragile emotional beast? I mean, he's got one hell of a poker face and he's very emotional when he's talking. And he doesn't really, those gigantic fuzzy caterpillars parked above his eyes almost never move when he speaks. But then he gets in the shower and he's really just a fragile beast who just needs a hug. So, oh, gee, maybe we shouldn't be so hard on Jerome. Now, you know what? He drove up the cost of living by the average person about 30% over the last few years. No, we're going to keep going hard on J Powell. Sorry, J Powell, you can't print trillions of dollars and then walk away like nothing ever happened. Thank you, Armando. And thank you, Charles G., who says, so don't buy the dip. What dip, Chuck? I mean, what dip are we talking about? The Nikola dip? Don't buy the bankruptcy dip? Yeah, that's good. The accounting irregularity dip? Yeah, that's not a dip to buy. You know, my CEO was just murdered by the CFO because they were sleeping with each other's wives and looting the company. Not a bullish technical indicator. Nope, don't buy that dip either. I don't know. I don't know. Sign of the times. What can I tell you? I can tell you the comments that I'm getting from the SMCI bros. I am going to frame some of these things. They are just so wonderfully awful. They're like, oh, I made so much money, you freaking loser. Congratulations. Your fraud is up. Congratulations. I mean, hey, Sam Bankman-Fried did very well with fraud. Elizabeth Holmes did very well with fraud right up until they didn't. So you know what? Congratulations. You made money on Enron stock. Good for you. Most people got wiped out. And history doesn't remember the arrogant a-holes who made a little bit of money before the crash. It's not how that works. All right. Thank you very much, Chuck G. I appreciate the super chat, sir, and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads once again this morning. Appreciate the super chat, guys, and the generosity. Also, thank you to my magnanimous Melonheads on YouTube and Patreon. You guys rock. Links down below to all that good stuff, should you feel so inclined. Don't forget that like button and the subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.